Company's account. We will have a format for publishing a company's account. Based on the format you have copied before, we want to practice exercise 34.2. UKJ Limited manufactures sugar. Its authorized share capital 800,000 naira, made up for 600,000 ordinary shares of 1 naira each and 400,000 3% preference shares of 50 kobo each. During the year ending 31 December 1989, the following balances were extracted from the financial records of the company. We are given the trial balance. Additional information. A. Provision is to be made for the preference shares dividend. The directors recommended ordinary share dividend of 4%. B. Goodwill is to be written off over 4 years. We are required to prepare appropriation account for the end of 31 December 1989 and in the balance sheet at that date. Now, for appropriation account, what you need to know is that any additional information you have, what you're going to post in your appropriation account. The remaining account, which is trading account and profit and loss account, is the same format for ordinary account. There's no difference. But for the company's account, the appropriation account is only used to determine the dividend and anything you are going to reserve. So to prepare an appropriation account, you follow all the information you have in your additional information. Now, the first one here, he said, provision is to be made for preference shares dividend. Our preference share dividend here is 100,000 naira, and it is a 3% preference shares. So we now look for 3% of 100,000 naira. That will give us, that's preference shares dividend. So that will give us 3,000 naira. That's 3% of 100,000. Give us 3,000 naira. Then for ordinary share, so that ordinary share, the director recommended an ordinary share dividend of 4%. And our ordinary share figure here is 500,000 naira. So 4% times 500,000 naira, that will give us 20,000 naira for ordinary shares. Then we have goodwill. Goodwill is written off for 4 years. Our goodwill in the question is 20,000 naira. 20,000 divided by 4, that will give you 5,000 naira. So our goodwill written off that will give us 5,000 naira. For the next 4 years, we pay 5,000 naira as a goodwill written off. Then we have on the credit side, our net profit from the last year, that's net profit for the year. We have net profit for the year of 80,000 naira. Net profit BD 80,000 naira. Now, you now add up the debit side, you minus it from the credit side. Total figure we have here is 28,000 naira. You minus 28,000 naira from 80,000 naira, we have a difference of 52,000 naira. And now we called unappropriated profit. That gives us 52,000 naira. We call it unappropriated profit, or we call it balance CD. It will give us the same thing. So the two sides will now be 80,000 naira, 80,000 naira. That is the appropriation account. Now for our balance sheet now. Balance sheet as at 31st December 1989. We start with our authorized shares. Now, from the question here, they have authorized share capital of 800,000 naira, made up for 600 ordinary shares of 1 naira each and 400 3% preference share. So we now have 600,000 ordinary share of 1 naira each. That give us 600,000. Then I have 3%, 400,000 preference share of 50 kobo. That give us 200,000. So everything now be 800,000. This is our authorized share capital. You close it. We now go to issued and fully paid. Issued and fully paid. Now we are issued 500,000 naira, ordinary share of 1 naira each. So we now have 500,000 ordinary shares of 1 naira each. That give us 500,000. Then we have 3%, 200,000 preference share of 50 kobo each. That will give us 100,000. So this is 600,000 and this is the issue share capital. Then after that now, we now go to our reserves. For the reserves, we have our general reserve. From the question, we have general reserve. General reserve is 30,000 naira. We have general reserve. That's 30,000 naira. Then we also bring in our unappropriated profit, or we call it retained earning, or call it balance CD. It's going to be the same thing. We call it our retained earnings or retained profit. Retained profits, 52,000 naira. That is our profit that we had, that unappropriated profit, 52,000 naira. This one will give us 82,000. So now go to our long-term liability. Long-term liability, we have the debenture there. We have 5% debenture. And then the debenture of 20,000 naira. Then we also go to current liabilities. Our current liabilities, we have our preference shares proposed dividend. We have preference share dividend of 3,000 naira. Then ordinary shares dividend of 20,000 naira. Everything give us 23,000 naira. By the time you add up 600 plus 82 plus 20 plus 23, everything will give us 735,000 naira. That's for the assets, the liability side. Now to the capital side now. For the capital side, we have fixed assets. Cost, depreciation, net book value. The first one is land and building. And the cost of land and building from the question, land and building give us 517,500. Depreciation is 0. So you have the net book value of 517,500. Then the next one is furniture and fitting. We have at cost 25,000 naira. We have provision for furniture and fittings 2,500 naira. So and our net book value give us 22,500. Then we also have motor vehicle. The cost is 80,000 naira. We have depreciation for motor vehicles is 16,000 naira, and the net book value give us 64,000 naira. So we have 604,000 naira for the fixed asset. Then we now go to our fictitious asset, which is the goodwill. Goodwill is in between fixed and current asset. It's not current assets. So our fictitious assets, we go to goodwill, which is we have a balance of 15,000 because 20,000 we have the record. We have written off 5,000, so we have a difference of 15,000 naira. 20,000 is the cost minus 5,000. The net book value will be 15,000 naira. 15,000 naira for goodwill. Now add up total figure for goodwill. 0, 0, 0. This is 9. This is 1. This is 6. So now go to our current assets. For our current asset now, we have our stock. Our stock is 25,000 naira. We have our debtors, 50,000 naira. We have our bank, 40,000 naira. And we have cash, 1,000 naira. Total is 116,000 naira. By the time you add up the two sides, it will give us 735,000 naira. So that is the end of the question. So for your assignment, we have exercise 34.4 and 34.9 to be submitted on Friday by 2 p.m. Unfailingly, you must submit by Friday by 2 p.m. So, if you have any difficulty,